Hi, and thanks for joining us for the Purdue University CME Group Ag Economy Barometer September survey results. I'm Jim Mintert, Director of the Purdue Center for Commercial Agriculture, and I'm going to share with you the highlights of this month's survey. The Ag Economy Barometer dropped 14 points this month to a reading of 124 compared to 138 last month, and the index of current conditions fell to a reading of 140 from 152 last month, while the index of future expectations declined to 116 from 132. The Farm Financial Performance Index did not change this month with a reading of 110, same as last month, but the percentage of producers expecting better and the percentage of producers expecting worse performance both increased, while the percentage expecting no change in financial performance actually declined. The Farm Capital Investment Index fell to a reading of 43 this month. The percentage of producers planning to increase their machinery purchases fell to just 8% this month versus 10% in August. And 55% of the producers in our survey said that low farm machinery inventories were impacting their machinery purchase plans. Farmers are clearly worried about farm input price inflation. The percentage of farmers that expect farm input prices to rise by more than 12% rose to 34% this month from 21% last month. And when we combine that group with those that expect farm input price inflation to be 8 to 12%, nearly half the people in our survey expect that level of farm input price inflation. Farmers are becoming less and less optimistic that ag exports are going to grow over the next 5 years. At the beginning of 2020, 70% of the producers in our survey said that they expected ag exports to increase over the next 5 years. This month, that had declined all the way to 37%. Despite the weakness in the Ag Economy Barometer Sentiment Index, farmers continue to be very bullish about farmland values. The long-term farmland value expectation index rose to a record high reading of 159, and the short-term index rose as well. Nearly half of corn and soybean producers in our survey said they expect farmland cash rental rates to rise in 2022 compared to 2021. Among those producers that expect cash rental rates to rise, 30% of them said that they expect rates to rise by 10% or more. 44% said they expect rates to rise by 5 to 10%. And just 26% of producers said they expect rates to rise by less than 5%. That wraps up our survey results for this month. You can get the full report on our website, purdue.edu/agbarometer, or listen to our podcast, Purdue Commercial AgCast. And I encourage you to join us for our upcoming webinar on October 13th, which will focus on the corn and soybean outlook. On behalf of the Purdue Center for Commercial Agriculture, I'm Jim Mintert. Thanks for joining us.